Every time you place a buy or sell order, do you feel as if an invisible force is watching you? A force that already knows what you are about to do, sweeping your stop loss in an instant and leaving you defeated in the race for speed? You are not up against a person. You are up against a billion-dollar electronic beast. Wall Street's high-frequency trading, HFT algorithms. These machines execute thousands of trades in milliseconds, faster than the blink of your eye. The naked truth about HFT, the arms race of speed. Let's face the truth. If you are losing money consistently in the market, it is not just because of poor analysis. You are being manipulated. Your enemy is not a trader sitting in a New York apartment. Your enemy is code. HFT is not a strategy. It is an arms race for speed. When you click your mouse to place an order, that information travels through cables and servers, taking a few hundred milliseconds. But what about the HFT funds? They are not based in some distant office. They spend millions of dollars to place their servers right next to the exchange's servers. This is called co-location. That means their orders travel at the speed of light, sometimes in just a few microseconds. They can see your order being processed, make a decision, execute their order, and cancel it, all within the blink of an eye. Here is the bottom line. You are fighting with a dull knife while they are using machine guns. When the market spikes, HFT dominates. They beat you with ping. They receive the news and react faster than you can imagine. By the time you're reading the headline, they have already bought or sold millions of shares. They create slippage. They see you want to buy in size, so they quickly jump in ahead of you, push the price up slightly, and then sell it back to you at a higher level. They profit from your slowness. This is legalized drip-by-drip theft, and it cannot be stopped. You cannot win the race on speed. Speed is their game. Behind the screen, the weakness of big funds. So, are we doomed to lose? Absolutely not. The biggest truth, and our ray of hope, is this. While fast, HFT algorithms are not intelligent in the human sense. They are machines bound by rules, and their rules are programming. You think an algorithm is a cold, flawless machine? Wrong. Algorithms have emotions. Not fear or greed, but programming obsessions. They are obsessed with two things: liquidity and stop-loss levels. Secret 1. The liquidity obsession algorithms are programmed to find areas with large order flow so they can execute massive buy or sell orders for smart money without moving the market too far. They need water to swim in. Without enough liquidity, their execution suffers heavy slippage, causing losses for the fund. That is why the first action of HFT is to scan the depth of the market, finding where your money and the orders of small traders are waiting. Secret 2. Hunting your stop loss. This is the most important part. Big funds know exactly where retail traders place their stop losses, just below support, just above resistance. This is not random. It is the law of psychology. Algorithms are released to sweep those zones. The goal is not only to make you lose money, but also to create instant liquidity from your sell orders when a buy stop is triggered, or your buy orders when a sell stop is triggered. They trigger your stop loss, absorb that liquidity, and then execute their main position in the opposite direction at a far better price. They create the storm, feed on your liquidity, and then quietly trade in the opposite direction once the storm subsides. In short, algorithms are predators, and liquidity is their bait. If you cannot win by speed, you must win by strategic intelligence. Now that we know what the enemy is obsessed with, the question becomes, how can we be the most patient, the most perceptive, the ones who read their intentions and turn those very liquidity sweeps into our own trading opportunities? This is how I did it, and here are the 3 strategies you must learn. Strategy 1. Harnessing patience. Waiting for the storm to pass. We have already established one truth. You cannot win the speed race. But you can win the race with patience and clarity. This is something algorithms are programmed never to do. High-frequency trading algorithms are designed to act immediately when liquidity conditions are met. They operate on events and instant reactions. They have no function to wait 30 minutes, reassess the context, or in other words, they have no human patience. This is the very psychological gap we exploit. What is the goal of HFT? It is to sweep stop-loss zones and harvest liquidity. This is the infamous stop hunt. Once they complete that mission, once all the retail stop losses have been triggered, their purpose has been fulfilled. They begin to ease the pressure and allow price to move in the true intended direction of smart money. Executing the strategy, trading in the clean zone. Here is how you apply this method and turn other people's losses into your gains. 1. Spot the fakeout. Most traders get trapped when price appears to break a key support or resistance level. For example, yesterday's low or the Asian session high. As soon as price sweeps through that level, inexperienced traders rush to enter in the direction of the breakout. This is when HFT steps in. They push the market slightly deeper, triggering stop losses sitting just below or above that zone. On the chart, you will see a candle with a very long wick piercing through the support or resistance. That is the sign of a liquidity flush. 2. Wait for the rejection. Your strategy is to not trade in that heated moment. Instead, you wait. If that breakout move is only an algorithmic stop hunt, the market will quickly reverse and close back inside the support or resistance level. The candle created by HFT will leave behind a massive wick like a fingerprint of strong rejection. This is the signal. The algorithm has finished its job. Liquidity has been collected. Selling or buying pressure has dried up. 3. Take the flip. When that candle closes, waiting for the close is the key to patience, and it clearly shows strong rejection. For example, a pin bar or a strong engulfing pattern. You enter in the opposite direction of the initial stop hunt. If the algorithm swept below support, you buy when price closes back above support. If the algorithm swept above resistance, you sell when price closes back below resistance. You are trading after the storm has passed. You are following the true intent of smart money, which used HFT to clear the market. The absolute edge of patience. The advantages of this strategy are undeniable. 1. Ultra-tight stop loss. Your stop is placed just beyond the long wick, the sweep of HFT. This is the most logical stop because the market just declared it does not want to go beyond that level. 2. Massive risk to reward ratio. Since you entered at the genuine turning point, after the sweep, you are riding a powerful move that offers huge profit potential compared to the risk. Always remember, in this battle, your slowness is your superpower. Let the algorithms burn their energy. Let them generate the liquidity for you. Your only job is to wait and then strike decisively once the market has been cleaned. Strategy 2. Reading order flow, seeing beyond the chart. If strategy 1 is about patience, then strategy 2 is about vision. Most traders are deceived by the price chart. The chart is only the result of the battle, just the surface of the lake. You are looking at the remains of the war, not the war itself. High-frequency trading algorithms do not trade based on your RSI or MACD lines. They trade based on orders. To win, you must stop focusing on what has already happened and start looking at the intent that is forming, the order flow. This is where smart money leaves its fingerprints, and it is also where HFTs are forced to play by the rules of the game. Blindness of traditional indicators. Let us face the brutal truth. Traditional technical indicators are calculated from closing prices or averages of past candles. That means you are always a step behind the market. HFTs are different. They operate in real time, watching the depth of market, DOM. They care about two core elements, the very locations where liquidity exists. 1. Limit orders. 2. Large market orders. When a big fund wants to buy millions of shares, they cannot simply place one massive order. They use HFT algorithms to split that order into thousands of smaller executions carried out quietly. That is their true buying or selling intention. Executing the strategy, decoding the mystery of volume mass. To read order flow, you must look at volume from an entirely different angle, not just the simple bars beneath your price chart. 1. Hunt for liquidity magnets, volume profile. The first tool you need to master is the volume profile. This tool shows you the total traded volume at specific price levels rather than across time. When you see a price zone with massive accumulated volume, a volume node, it signals that a major battle has taken place. This is where algorithms have been most active, distributing or accumulating positions. That zone becomes a new liquidity magnet, a price level the market and HFTs will likely revisit or react strongly to. When price moves far away from a dense volume profile area, it often has a natural tendency to return. Use these zones as take-profit targets or as launch pads for entries. 2. Reading imbalances. The second tool requires sharper focus. Analyzing real transaction volume using order flow tools, such as the footprint chart. HFTs always try to balance buy and sell orders to maintain efficiency. But when you see a sudden imbalance, for example, market buys massively outweighing market sells at a key level with enormous volume, it reveals real pressure coming from smart money. At that moment, a large fund is no longer hiding its intent, but is willing to push the market. That is the strongest possible signal of directional intent, and the HFTs are compelled to follow. The golden rule: double confirmation. If you combine strategy 1, waiting out the stop hunt, with strategy 2, reading order flow, you achieve double confirmation. First, HFTs sweep a support or resistance zone, strategy 1. Immediately after the sweep, the volume profile or footprint chart shows massive transactions in the opposite direction, strategy 2. That is not just a trade. That is a cash-loaded opportunity. Always remember, HFTs are predators. Order flow is the treasure map that reveals where they hide their prey. Learn to read that map, and the market will never look the same to you again. Strategy 3. Challenging chaos. Exploiting algorithmic noise. The first two strategies are about patience and analysis. This third strategy is about timing and taking big swings. We already know that high-frequency trading algorithms are extremely efficient machines when the market is quiet and predictable. They are programmed to detect repeating patterns and exploit tiny price discrepancies. But when the market suddenly loses its logic, when human psychology takes over, that is the moment when HFT becomes most vulnerable. The machine's blind spot. Macro news. HFTs can process price data 1,000 times faster than you, but they cannot understand the meaning of a sentence, a shift in tone, or an unexpected statement. Think of major events: Federal Open Market Committee, FO meetings, non-farm payroll, NFP reports, or surprise interest rate decisions. At the very moment this news hits the tape, the market shifts from a speed war to an information war. This is when HFTs are thrown into data noise. Raw shock to the system. Macro news can completely contradict every pre-programmed model. Chain reactions. Algorithms linked to one another may trigger uncontrolled chain responses, causing massive spikes in both directions before the market regains balance. This is your golden opportunity to leverage your greatest edge: critical thinking and human interpretation. Executing the strategy, trading the recovery. You are not trying to place trades before the news. That is roulette. This strategy is about waiting for the initial shock to finish. 1. Spot the washout. The instant news is released, price will surge wildly. Algorithms will react by dumping or executing massive orders recklessly. This moment is like a tsunami, wiping out every stop loss and pending order in its path. 2. Reassess with human logic. While HFTs are trapped in noisy data, your job is to evaluate. What is the true economic meaning of this news? Does it change the long-term strength of this currency or asset? For example, if the Federal Reserve issues a statement that is less hawkish than expected, but the initial spike drives price higher because short positions were forced to cover, you must recognize that the underlying logic actually favors the downside. 3. Act on high probability. Once the washout has played out, usually a sudden spike candle, or a candle with a long wick, and price begins to stabilize or reverse in line with the economic logic you just analyzed. You enter the trade. Your stop loss is tiny, placed just beyond the wick of the washout. Here, you are betting on the smart money, the big funds, switching off their automated HFT mode and trading like humans, making decisions based on the real meaning of the news. Final word of caution. This is a high-risk strategy, but when you are right, the risk-to-reward ratio is extraordinary because you are participating in the most powerful price movements, the ones driven by human logic after the algorithmic storm has passed. Always remember, you do not need to be faster than the machine. You only need to be smarter than it when it loses direction. You have just uncovered 3 golden principles for surviving and thriving in a market dominated by algorithms. We have stopped playing the speed game, a game we were destined to lose. Instead, we choose to play the game of strategy. We exploit their programmed weaknesses with patience, vision, and human logic. Look back for a moment. Strategy 1 taught you to wait out the storm of stop hunts and trade only in the clean zones after liquidity has been swept. Strategy 2 pulled you behind the curtain to read the order flow, revealing the true intentions of smart money through the fingerprints of volume. And strategy 3 armed you with the weapon to strike at the blind spot of HFT, the chaos unleashed by macro news. Now, put them together. A true Wall Street trader does not rely on a single tool. They operate with an integrated system. When all three signals align, the sweep, the volume confirmation, and the economic logic pointing in the same direction, you are no longer just another retail player. You are the next predator in the market. So, after all, what is the real battle between you and high-frequency trading algorithms? It is not a fight between fast and faster. It is a fight between soulless speed and disciplined thinking. HFTs are like Formula One race cars, blisteringly fast, but locked to a pre-programmed track. You are the driver. You have the ability to swerve, to analyze, and to change tactics when the track becomes chaotic. Stop thinking of HFTs as the enemy. Think of them as the market's cleanup crew. Their job is to flush out weak orders, to create the liquidity pools that big funds need in order to build their positions. Your job is to let them finish that work, and then step in to trade in the true direction of smart money. The only difference between a losing trader and a winning trader is this: winners know who is really driving the market, and they know how to play by those rules without entering a race they cannot win. Remember this: you do not need to be fast. You just need to be right. And by applying these three strategies, patience, order flow reading, and exploiting chaos, you now have the tools to shift from being hunted to becoming the next predator. Do not waste this edge. Start putting it into action today. If this content has changed the way you see the market, show me. Like this video, subscribe to the channel so you never miss the trading secrets Wall Street does not want you to know. And drop a comment below. I am ready to beat the algorithm so we can build the smartest trading community together. See you in the next video.